Okay, so the first concept of retirement, that is calculation of new profit sharing ratio, gaining or sacrificing ratio. We have already completed that, and there was no problem in it. Yes.
Yes, sir.
Okay. Do you have any doubt in goodwill concept? Actually, there is two types of goodwill that will be given in the question. First one, goodwill, valued goodwill, and the second one is existing goodwill or appearing in the books. Okay. So
Okay.
if there is existing goodwill, then we write off the existing goodwill in old profit sharing ratio. And if goodwill is valued, then we adjust them in gaining sacrificing ratio. Okay. So
Yes.
these two treatment is for goodwill. The third concept is related to reserves accumulated profit or loss. Okay. So in this chapter, change in profit sharing ratio, we have done this journal entry, accounting treatment of reserves, accumulated profit or loss. So whenever there is any balance of reserves, accumulated profit or loss given in the books, given in the question, then we transfer it to partner's capital account in old profit sharing ratio. Okay.
So can you repeat?
If there is any balance of reserve, accumulated profit or loss is given in the question,
Sir, I
then
can't hear. Okay. I think my headphone.
Voice problem, or is it network problem again?
So can you speak once?
Yes, I'm saying that
Yeah, I
is
can.
there any voice?
No, I think it's my Bluetooth connection. It didn't get. Now I can hear you.
Okay, so I was saying that if there is any balance of reserves, accumulated profit or loss is given in the books, then we transfer it to the partner's capital account in their old profit sharing ratio. Okay.
Yes.
Okay. So there may be profit balance or there may be loss balance can be given in the quotient. So these are two entries for the transfer. Okay.
Yeah.
Okay. So general reserve account debit, workman compensation reserve account debit, investment fluctuation reserve account debit, profit and loss account debit to partners capital. You can see there is old ratio written in bracket here. Yes. So it means we have to distribute these balance in old profit sharing ratio.
Yes, sir.
Okay. After that, this workman compensation reserve and investment fluctuation reserve concept is given. So you can see the journal entry. There are different cases related to workman compensation reserve. Okay. These are previous chapter concept. That's why I'm going a little quick here. But if you have any doubt, you can ask question. I will revise that concept. Okay.
Yes, sir.
Okay. So you have to doubt in this concept of reserve.
No, sir. It's fine.
Okay, good. So in previous class, we were discussing a revaluation. That's when our network issue started.
Yes, sir.
Okay, so I'm sharing with you. You can see the a revaluation of assets and liabilities in this presentation.
So it's loading. Yes, I can see.
Okay. So you can see here that profit or loss due to increase or decrease in value of assets and liabilities in past profit. Therefore, it should be distributed between old partners so that new partner don't get any advantage or doesn't have to bear any loss. This concept, which is written here, is related to admission of a partner. Okay, that's why it's written that new partner don't get any advantage or doesn't have to bear any loss. So when a retiring partners going from the firm, okay, so due to change in value of assets and liabilities, there is some profit or loss, okay, and that profit or loss is past profit, which is written here. This is past profit, okay, and in past profit, share of all partners is included. Yes.
Yes, sir.
Okay, so this past profit should be distributed between all partners, and if one partner is going from the firm, then he will take his share in this past profit, revaluation profit or loss, and then go. Okay, that's why we have to distribute the revaluation of revaluation profit or loss. So there is two cases written. You don't have to study this case number 2, where assets and liabilities are required to be shown at book value. Okay, you don't have to record it at revised value. You record those assets and liabilities at their old value. Okay, so we don't have
Yes.
to study this concept for the examination, but I will give you some description. Okay, so first case, when assets and liabilities are required to be shown at revised value, means we have to record the revaluation. Now, if we understand the journal entry here first, let me erase the okay, so in this case, all assets and liabilities are revalued, and profit or loss on revaluation is distributed between partners in their old profit sharing ratio. Okay, so except from goodwill, only goodwill is adjusted in gaining sacrificing ratio. And other than goodwill, we have to adjust all other items in old profit sharing ratio. Either it is revaluation profit or loss, it is accumulated profit or loss or reserves, uh, maybe it is old or existing goodwill. So we have to adjust all items except valued goodwill in old profit sharing ratio. Is that clear?
Yes, sir.
And you have to remember one thing also, that goodwill is never transferred to revaluation. You don't have to write goodwill in any case in a revaluation.
Okay, sir.
Okay. So if question asks you to record the increase or decrease in value of assets, then you will record this in a revaluation account. Like if there is a building of rupees 20,000, let's say, if there is a building of 1 lakh, okay, and current value of this building, this is cost, 1 lakh is cost, current value is 1,20,000. Okay, tell me what will be the amount which is to be recorded in a revaluation.
Um, Revaluation, is it 1 lakh?
In revaluation, you record only increase or decrease in value of assets.
20,000.
So you will record only 20,000. Now, which side, debit or credit of revaluation account?
Credit,
Why?
because it's an increase.
Because it's a profit.
Profit, yeah.
Yes. And revaluation account is a nominal account. So profit is recorded in the credit side. So 20,000, the credit side of revaluation account. Okay.
Yes, sir.
Okay. The second thing is, if there is a plant and machinery given, let's say plant and machinery, and its original value, book value, was 50,000, but now the current value is 40,000. Now tell me what will be the amount?
10,000.
And side
Debit side. Debit
side,
side.
because it is a loss. Okay.
Yes.
Now the third item, if it is, let's say, goodwill, 90,000, and valued goodwill is 1,10,000. What will be the amount?
Sir, we don't record goodwill, right? In revaluation.
Yes, very good. We don't record goodwill in a revaluation. So goodwill that is given in the books, okay, it should be written off in old ratio, and goodwill which is valued, this should be adjusted in gaining sacrifice ratio.
Yes.
You don't write goodwill in revaluation account. Very good. So these are examples. Now, if we talk about journal entry, okay, so in first case, building of rupees 1 lakh, which is valued at 1,20,000 right now. So revaluation profit is 20,000. What will be the journal entry in this case?
So can you repeat?
There is a building worth of rupees 1 lakh, cost of rupees 1 lakh, and the current value of that building is 1,20,000. Okay, so there is a profit of 20,000. Okay, so what will be the journal entry?
Okay. Is it revaluation to building?
A revaluation account debit to building. Revaluation account debit to building. Yes.
Yes, sir.
And if we prepare ledger from this journal entry, we are preparing revaluation account. Which side will this transaction will be written?
On the credit side.
So revaluation is on the debit side. So as per this concept, we have to write to building account.
Yeah.
As per this journal entry, I'm saying.
So left is credit and right is debit, yeah?
Yes. It's
Yeah.
Left is, no, sorry. Left is debit, right is credit.
Oh, okay, sorry.
So is
Yes,
there
sir.
any problem in this?
No, understood.
There should be a problem here.
In this, is the journal entry
Yes.
now?
Yes. Actually, if you remember, you have seen this revaluation 20,000 on the credit side. It is written here.
Yeah.
But if we post this journal entry into ledger, then it will be written in debit side. Yes.
Yes, sir.
So either journal entry is correct or your previous answer is correct.
I think the previous answer is correct.
Actually, previous answer is correct and
Yeah.
the journal entry is incorrect here.
Uh, uh, is it
Then
asset account revaluation?
yes, yes, it will be building account debit to revaluation account.
Can we write building or is it necessary to write asset?
No, we will write building,
Okay.
because if name of asset is given, then we have to write name of the asset.
Yes, sir.
So building account debit to revaluation account, then this revaluation is on the credit side, posting will be done on the credit side by building 20,000. This is correct. Okay.
Yes.
So you have to remember this in journal entry. If there is profit in any transaction, then in journal entry, revaluation is on the credit side. Revaluation will be on the credit side.
Yes.
Okay. And
Yeah.
if it is a loss, then revaluation account will be on the debit side of journal entry.
Yes. So is there any background noise? No, from my mic.
No, there is no background.
It's clear, right?
Yes.
Okay. Because this audio is showing not moving that mic.
Okay. Actually, there is no background noise I'm listening here. So, okay. So now journal entry here. You can see for increase in value of assets, it is assets account debit to revaluation account. You know, assets account is debited when there is increase in value. Okay. And assets account is credited when there is decrease in value.
Yes, sir.
So you can see the both entry here. Revaluation account is credited in first entry because there is profit, and
Yeah.
revaluation is debited in second entry because there is loss.
Yes, sir.
So you understood the concept?
Yes, sir.
Very good. The third, for increase in value of liability, if there is any increase in value of liability, then it is loss for the company. Yes.
Sorry, sir.
If there is any increase in value of liability, then it is loss for the firm or company.
So I didn't. No, the phone was ringing. I couldn't hear your voice.
Okay. If there is increase in value of liability, then
Yeah.
it is a loss for the company or not.
Yeah, it is a loss.
It is a loss because the book value of any liabilities, let's say there is a creditor of 20,000. Okay. But now we have to pay 24,000 to him.
Yes, sir.
So how much loss?
20,000.
20,000?
Yeah.
Okay.
Can you
let's
repeat? Can you
write
repeat?
it. Yes, I'm writing. There is a creditor of rupees 20,000.
Yeah.
And we have to pay 24,000 now.
So 4,000.
Yes, there is a loss of 4,000, not 20,000.
Yeah.
So why you said 20,000 previously?
No, I misheard the question.
Okay. So creditor is 20,000 and we have to pay 24,000. So there is a loss of 4,000 only.
Yes, sir.
Okay. So whenever there is any increase in value of liability, it is loss for the firm. And if there is decrease in value of liability, let's say some of the creditors give us discount while paying the amount.
Yes.
So in that case, that is profit for us. It will be liability account debit to revaluation account.
But I mean, we still have to pay some amount of the liability, right?
Yes.
So, but how is that profit then?
Let's say you have to pay 20,000. Okay.
Yeah.
And they accepted 18,000 from you.
Okay, so 2,000 profit, like that?
Yes.
Okay, got it, sir.
Because if you understand the concept by this journal entry, at the time of journal entry, we have done this. Like if we have to pay someone 20,000, so creditors account debit. This was the entry at the time of journal entry, I'm saying, not in this chapter. This is our previous concept. So creditors account debit to cash account. Creditors value was 20,000, the book value of creditors, and we have paid only 18,000. Yes.
Yes, sir.
So we write to discount received 2,000. Yes or no?
Yes, sir. Yeah.
Yes. So
Yes, sir.
this entry is converted now. Converted in this entry. Liability account debit to revaluation. In beside writing the discount account, we have written revaluation account here. Okay.
Yes, sir.
And there is no payment right now. That's why it is written liability account debit to revaluation, because the value is decreased only. There is no payment. If there is payment, then we have to write liability account debit to revaluation account to cash.
Yes, sir.
Okay. But there is only decrease in value. That's why we will write only 2,000 liability account debit to revaluation 2,000. Is this clear?
Sir, can you repeat what you just said?
Yes. So I'm saying that if the value of liability is only decreasing creditor account debit to a revaluation, then we will write this entry, the second one, 2,000 and 2,000, because there is no payment here.
Yes, sir.
The line will say like creditors have agreed to decrease their amount by 2,000. So it will be creditors account debit to revaluation account 2,000. Okay.
Yes, sir.
But if there is any cash payment involved, then the entry will become creditors account debit 20,000 to revaluation 2,000 and to cash 18,000. Okay. In any case, in both of the cases, if we are paying the amount or if we are not paying the amount, in both of the cases, 2,000 will go to revaluation account. Only
Yes.
2,000. Okay.
Yeah.
Because this 18,000 will go to cash account.
Okay. So in revaluation account, it's only the either like the loss or the profit that's
Yes. Increase
recorded.
or decrease in value will be recorded.
But where will this 18,000 go? Cash account?
Yes, in cash account.
Okay, sir.
In cash account, credit side, because it is a payment.
So this 18,000 that we are paying, that's a loss, right?
No, 18,000 we are paying, it's payment. The loss is 2,000 only.
Okay. Yeah.
Loss is 2,000 because we have to pay 20,000 to creditors, but we are paying only 18,000. We have to put 20,000 and we are paying 18,000. So 18,000 is not a loss for us. It is a profit of 2,000.
Okay. Yeah. Now I got it.
Okay.
Yes.
You are paying less amount to creditors. That's why it is a profit.
Yes, sir. Got it.
So whenever there is any decrease or increase, we will write only the difference amount in revaluation.
Yeah. Understood.
The value of change.
Yes, sir.
Okay. The next entry is for unrecorded assets, for unrecorded liability. So unrecorded assets account debit to revaluation account, unrecorded liability, revaluation account debit to unrecorded liability account. Okay.
Yes, sir.
Because unrecorded asset is the profit. That's why revaluation is credited, and unrecorded liability is a loss.
Yes, sir.
Okay. Actually, I have to give you some information. We have provided you. Actually, you have to practice some of the portion from CUET book that I will give you the detail. Okay.
Yeah. Is there like a particular book that I can study for this, or like should I
Yes.
just continue with the 12th?
It's objective type portion that is given. Okay. In that book, chapter wise objective portion.
Okay. So can you send me the
Okay.
details?
Yes. So you will practice the portion from that book, and I will at the end of each class, I will give you some of the portion from that book. I will inform you, and you have to solve those portions, and you have to show me the calculation part also. Okay, you don't have to
Yeah.
only give me like multiple choice option. Okay,
Yes, sir.
if there is any calculation involved, then you have to uh, give me the detail, or you can send me.
Yes, I'll send like I'll solve it and I can send you a picture.
Yes, you can send it here in chat also.
Yes, sir.
So I will give you the detail. It's Amazon Kindle book. Okay, so you have to download the Kindle from Play Store.
Hello, sir.
Wait, just 2 minutes.
Yes, sir. So you're sending it here or on WhatsApp?
Okay, you will receive actually. I have told our operational team. Okay.
Okay.
So you will receive the details. Okay.
Okay, sir. Yes, sir.
And okay, at the end of each class, I will give you the chapter number or chapter name with portion number. Okay. You
Yes,
receive?
sir. Yes. I'm not sure actually. That's my mother's number. Yeah, most probably she must have got it.
Okay. So it is already shared with you. I have received the message. So you can log in. Okay. And then you have to solve the question.
Yes, sir.
When you will log in, actually there will be some my options, my page, I think. Wait. Okay, you have to go to library. Okay. There
Yes, sir.
is 3 or 4 tab below the screen of this application, and there is library written. So you go to library and then you will see NTA CUET UZ 900 plus MCQ. So you can see the questions there.
Yes, sir.
Good. So here. So for unrecorded liability, for unrecorded assets. Now, after writing these entries, we have to calculate the profit or loss on revaluation. So this profit will be transferred to partners capital in old profit sharing ratio. So if there is profit, then entry will be revaluation account debit to partners capital account. And if there is loss, then partners capital account debit to revaluation account. Is this clear?
Yes, sir.
So on the basis of the journal entry, you can see the format of revaluation account. Revaluation account to assets account decrease is written on the debit side here, and increase is written on the credit side. Same with the unrecorded liabilities and liability increase. These three are loss and these three are profit. After writing all these, we total both sides and then calculate the balance. Balance can be on the debit side or credit side. If it is on the debit side, then it is profit for the firm, and it should be distributed in old profit sharing ratio. So it will be transferred to partners capital.
Yes, sir.
And if it is loss, then it will be transferred to debit side of partners capital.
Yes, sir.
So this is your revaluation account. Actually, this concept is also discussed, but there was some network issue. That's why I have repeated this concept of revaluation. Okay.
So can you repeat?
Actually, we have already discussed this concept in previous class, but
Yeah.
there was some network issue. That's why
Yeah.
I revised.
Yeah, we left the class because network was.
Yes. So now there is the concept of death of a partner also related to same retirement chapter. Okay, it is combined with retirement chapter, retirement and death of a partner. Okay, so all this concept is also included in retirement part. Okay, and after all these adjustment, we need to calculate the amount payable to retiring partner here.
Yes, sir.
Okay, so amount payable to retiring partner. Just wait. Amount payable to retiring partner. Now there is two concept of amount payable to retiring partner or amount payable to executor of deceased partner. These two concepts are same. Executor of deceased partner means when a partner die, then we have to pay the amount to the legal representative of that deceased partner. Yes or no?
Yes, sir.
Because he cannot accept the money right now. He is dead. Okay. So who will receive the money? The legal representative or executor.
Yeah. Okay. So the relative of the dead person. So,
Yes.
yeah.
So the amount payable to retiring partner concept is similar with executor of deceased partner. Actually, there's a only difference of name in the account.
So can you repeat?
Yes, there is just a difference of name in this account.
So I can't hear you again. So can you speak?
Versus, yes.
Yeah, I can hear you.
So
This Bluetooth is just disconnecting, that's why.
okay, no problem. Actually, there is just a difference of name in these two accounts. Okay, so we prepare the retiring partner capital account. You know how to prepare the retiring partner capital account? You know how to
Yes.
prepare the capital account?
Partners capital account?
Yes, partners capital account.
Yeah.
Yes,
Particulars and the partners' names.
yes, that is format. But what are the item names that is written in
Ah,
capital?
I don't know.
Actually, we have discussed this concept in fundamental chapter, partnership fundamentals.
So is it the profit and loss?
This is at balance PD by cash, additional capital, profit, interest on capital, salary or commission. There is two methods, fixed capital account method and fluctuating capital account method. And these items that we have to write. Okay. So let's prepare the format first. Okay. Okay. So first we start with balance. By balance PD. Okay. Expected.
Hello, sir.
Yes, sir. Okay.
Sorry, sir. Network.
Okay. So I was saying that
The partners
we have
capital.
to prepare the partner's capital account. So here it is. First item, the buy balance BD. We have to start with partner's capital account with their opening balance. Okay.
Okay.
But if the business is started in current year, then there will be no opening balance.
Yes, sir.
Okay. So buy balance BD. After that, interest on capital. Interest on capital of partners, salary, commission of partners. If there is any additional capital introduced, then by cash account. If it is, let's say, profit or loss on any reserves profit or loss on revaluation or reserves, goodwill. These will be adjusted between partners in their respective profit sharing ratio. Okay, the old profit sharing ratio or gaining sacrificing ratio, goodwill is distributed in gaining sacrificing ratio. So by reserves, if there is any, by revaluation profit, same here in the to profit and loss account loss. If there is drawing, then to cash account drawing. If there is any interest, to interest on drawing. So items that will increase the capital will be written on credit side, and items which will decrease the capital will be written on the debit side. Okay. Is this clear to you?
Yes, sir. So 1 second, I just want to take a screenshot.
Okay.
Yes, sir.
Okay. So by balance PD, revaluation, and if there is any, let's say, goodwill. So goodwill is written like by partners capital account. Okay, because other partners will give the goodwill to the retiring partner. So this, after writing all the items, you have to total the both side. Okay, and whichever is higher will be written on both side. Okay.
Yes, sir.
After that, the balance will be transferred to retiring partners loan account. Retiring partners loan account. Okay. If the amount is paid at the same time, then there will be two cash. And if it is not paid, it is carry forwarded as loan, then you will transfer the balance amount to partners loan account. Okay.
Yes, sir.
Okay. And if a partner is dead, in case of death of a partner, then this amount will be transferred to executor loan account or executor account, you can say.
Yes.
Okay. So there is no different procedure, same procedure, just difference of name in both of the cases.
Yes, sir.
Okay. So the amount, if it is already, it is paid right now, then it will be transferred to cash account. And if it is not paid, carry forward it as loan, then retiring partners loan account or executor loan. Okay.
Yes, sir.
Good. Just wait 1 minute. Uh, Okay. So there is this two concept I'm showing you right now. You can see the PDF here.
Yes, sir.
Actually, it is a question prepared, but this is the format. If you want to take a screenshot, you can take this screenshot.
Yes, I do.
Okay. So this is capital account of partner. You can also calculate this amount by preparing a simple statement. Opening balance of capital, share in goodwill. These are the items which is to be added here, and these are deducted here. So after that, amount we will to retiring partner. You can see here for payment to retiring partner in cash. If you pay the amount at the time of retirement, then the entry will be retiring partner's capital account debit to cash account.
Yes, sir.
And if it is not paid here, then for transfer of amount payable to loan account. Okay, so if you pay the amount at the time of retirement, then to cash account, and if it is not paid, then for transfer of amount payable to loan account, so retiring partners loan account here, journal entry. Okay, you will show this in the account also. You can see here, actually, you can see here, retiring partners loan account I've written here. So retiring partners loan account. Okay.
Yes.
Now, loan can be paid in lump sum or installment. Means if it is transferred to loan account, you can pay the loan in one installment or in different installment. Yes.
Yeah. Yes, sir.
Okay. So if you pay the loan in lump sum, then retiring partners loan account debit to cash account, because it is paid at one time. So it is simple, retiring partners loan account debit to cash account. But if it is paid in installment and we have to pay interest on that amount also, then these entry will be done for interest due, interest on loan account debit to partners loan account, for payment of installment, partners loan account debit to cash account. Okay.
Yes, sir.
Okay. Actually, interest on loan is expenses for the firm, income for the partner, but expenses for the firm.
So can you repeat?
Interest on partner's loan is expenses for the firm.
Expense, but yeah. Okay.
Yes.
Yes.
If you see here, I'm saying that okay, so interest on loan, because loan is given by partner to the firm. Okay, so interest will be paid by firm to partner. Yes.
Yes, sir.
So interest is expenses for the firm and it is income for the partner, but we don't record the transaction with the perspective of partner. We record it with a view of business. Yes.
Yes, sir.
So interest on loan account debit to partners loan account, because the amount will be credited to partners loan account. For payment of installment, then partners loan account debit to cash. Sometimes we prepare the account for this also. Okay. We prepare the account of partner's loan. Just see the concept. Do you remember the loan account preparation? Yes or no?
So,
Do you know how to prepare loan account?
uh, yeah, particulars amount, particulars, right?
No, I'm not talking about format actually. We understand the concept of format now. Retiring partners loan account. Actually, particular amount is just a format part. It is not an issue. I'm asking that what will be written on debit or credit side of loan account? Okay. So, sorry, it is retiring partners loan account. So the first thing that comes here is retiring partners capital account balance, because when we prepare retiring partners capital account, then the balance is transferred to this account when it is not paid. Yes.
Yes.
When the firm pays the amount to retiring partner, then it is settled. There is no need to transfer it to loan account. But when it is not paid, then the capital account balance is transferred to loan account. So first thing will be written here is by partners capital account, because we transfer the balance from capital account to here in this account. Okay.
Yes.
After that, I told you if it is paid in one installment, there is no interest on it, then the entry is retiring partners loan account debit to cash account. So you will write here to cash account and the matter is solved. The amount will be written here and the total will be equal. So there is no balance. There is no need to forward the balance. Okay.
Yes, sir.
But if the amount is paid in 2 or 3 installment, then interest will be payable. Okay.
Yeah, like in installments, not lump sum.
Yes. Let's say if it is the amount payable is, let's say 20,000. Okay. And it is to be paid in 4 installment along with 10% interest. Okay. So let's solve this small example. The amount payable is 20,000. So balance transferred will be 20,000 here. Okay. Is this clear to you?
Yes, sir.
Okay. This is the last balance of capital account, which is transferred here. Okay. And we have to pay in 4 installment. So the first installment is along with 10% interest.
Yes, sir.
For annual installment, actually. It can be given half yearly or quarterly or monthly. Okay. So I am taking it as annual. So 4 installment annual along with 10% interest. So by partners capital on this amount, the interest on loan will be 20,000 into 10%. It will be 2,000. Yes.
Yes, sir. 2000.
Can you tell me the amount of installment that is to be paid in first year?
2000.
Only 2,000?
No, 2000 into 4, 8000.
No,
You said
not
4
actually.
installments annually, right?
Yes. So you have to pay this amount in 4 installments. So the each installment amount will be 5,000.
Sir, I didn't understand.
You have to pay 20,000 to the partner. Yes.
Yes, sir.
And that 20,000 will be paid in 4 installments. That is 4 parts. Okay.
4 parts. Okay. So 5,000 into 4,
Yes,
20,000.
20,000. So
Yeah.
you have to pay this 20,000 in 4 installment. Means if you pay 5,000 per year, then in 4 installment you will pay 20,000. Is this clear?
No, sir. I'm confused.
Okay. Okay. Let me tell you some another example. Let's say you join a coaching institute. Okay. And fee of that coaching institute is 10,000. Okay.
Yes, sir.
Okay. And they tell you to pay the amount in 2 installments. So what will be the installment amount?
10,000.
The total fee of the coaching institute is 10,000, and they tell you to pay the installment amount, pay in 2 installments.
Okay.
Okay.
So 5,000, 5,000.
So how did you calculate that?
10,000 divided by 2.
10,000 divided by 2. So we
Okay.
have to pay 20,000 here, and we have
Yes,
to
sir.
pay it in 4 installments.
Yes, sir.
So 20,000 divided by 4,
Yes, sir.
5,000.
Yeah. Now I got it.
Along with interest also. So
Yes, sir.
wait, actually, my laptop battery is low. Okay. So amount payable to retiring partner is 20,000, and we have to pay it in 4 installment along with 10% interest. So 10% interest is 2,000. Yes.
Yes, sir.
So along with interest 2,000. So total amount payable is
7,000.
very good. 7,000. So here it will be 2 cash accounts, 7,000.
Yes, sir. So this interest on loan doesn't include with the 5,000. It's separate.
Yes, it is
Then
written here. You have to pay this amount in 4 installment along with interest.
okay.
2. Balance CD 15,000. Again, it will be transferred to next year here by balance BD 15,000. Okay. Is this clear?
Sir, why 15,000?
Total amount payable was 20,000 plus 2,000 interest to 22,000. Yes.
Yeah. Yes, sir.
22,000, and we have paid 7,000.
Yes, sir.
So the balance is 15,000.
Yeah.
This balance is transferred here.
Yes, sir.
Okay. Now current year interest 10% by interest at the rate 10%, it will be 1,500. Okay.
Yes, sir.
So the amount payable in current year will be amount payable in current year will be
5,000? Or no, 20,000.
5,000 is installment amount. Yes.
Yes, sir.
And you have to add interest in each year.
Okay. So 6,500.
Yes. Yes.
Yes.
It is 16,500. 16,500. The balance will be 10,000. Yes.
Yes, sir.
Now this balance will be transferred to next year again. So it will be by balance BD 10,000. Again, we have to charge interest. So interest amount will be 1,000. You have to calculate interest on opening balance. Okay.
Yes, sir.
So 10,000 into 10%, 1,000. Now, can you tell me the installment amount here to cash account?
Sir, is it 10, 11,000?
How? You are not seeing the previous amount paid.
Previous amount paid is 16,500.
16,500 is amount paid.
Yeah.
No. If 16,500 will be paid, then there will be no balance here. 1,600, 500 is total amount that is to be paid, but it is not paid in one installment.
Yes, sir.
You in each installment, how much principal is to be paid?
10%. 10% interest, right?
10% is interest. I'm asking you the principal amount.
5,000.
5,000. 5,000 is principal amount and along with 10% interest. So you can
Yes.
see every installment is of 5,000 only. You have to remember this concept. In second year, you said 15,000. I told you it is not correct. In third year, you are saying 10,000. It is also not correct. Okay. So you are repeating your mistake actually. You are saying the same amount again. Okay.
Yes, sir.
Can you tell me the installment amount now? You just told me the installment amount.
Yeah, 5,000.
5,000. That is
Yeah.
principal. Yes.
Yes, sir.
Now, how much interest we have to pay?
10% of 5,000. Oh, is it 5,500?
No, no. How much interest we have to pay in current year? Interest is already calculated.
1,500.
Where?
You wrote by interest.
This,
Yeah.
I have written interest here also. %10 interest rate is given. Yes.
Yes, sir.
And it is calculated on which amount?
5,000.
Opening balance of current year.
Yeah, that is 5,000, right? We are paying 5,000 monthly.
Opening balance of current year. It means in first year, the opening balance was 20,000. Opening balance means this transferred amount or to balance BD, by balance BD. So
Transferred amount.
no, I'm not asking you. I'm saying either it is the transferred amount or by balance BD. Okay.
Okay.
So both
Yes.
can be. So in first year, it is transferred amount 20,000. So 20,000 into 10%, 2,000. In second year, it is opening balance, that is 15,000. So 15,000 into 10%, 1,500. In third year, the opening balance is 10,000 only, not this amount. You cannot take second year amount in third year.
Yeah. So
in third year, it is 10,000. So the interest amount is 1,000.
yeah,
And principal amount that is to be paid is
6,000.
the installment is 6,000. 5,000 of principal and 1,000 of interest.
Yeah.
Is this clear or not?
Yeah, it's clear.
If you are confused, you can ask questions.
No, it's fine. I understood.
Because I will ask one more time this question.
Yeah. Okay, sir.
It is fourth installment by balance BD. It is 5,000. Now tell me what will be the interest amount. What will be the amount?
500.
500. Very good. 5,000 into 10%. Now what
Yeah.
will be the installment
5,500.
amount? 5,500. Very good. So in fourth year, the amount is fully paid. There is no amount left.
Yes, sir.
Sorry. So it takes 4 years so that you can understand this concept. If I have taken 3 years only, then there may be some problem. There may be some confusion in your mind. Yes or no?
So can you repeat?
I said it takes 4 years to understand the concept. Yes.
Yes, sir.
If I have taken only 3 installment here, then there may be some doubt.
Yeah.
Okay. So you understood the concept. First, you have to transfer the amount from partners' capital to retiring partners' loan account. Okay.
Yes, sir.
You have to calculate the interest on opening balance of each year. Okay.
Yes, sir.
And then you have to pay the amount of principal and interest together.
Yes, sir.
So 5,000 was principal installment and 1,000 is 2,000 interest in first year, 1,500 in second year, 1,000 in third year, and 500 in fourth year. So you have added all these with the 5,000 and you get 5,000 plus 2,000, 7,000, 5,000 plus 1,500, 6,500, 5,000 plus 1,000, 6,000, and 5,000 plus 500, 5,500.
Yes, sir.
So this is the concept of executor's loan account also. You have to remember this concept.
Yes, sir.
So you can take the screenshot of this journal entry. Yes.
Yes, sir.
Then so we have to understand this concept also. But before that, I will tell you one different concept. Okay, so there is a difference between this hello Richard.
So yeah, my network.
Which connection actually you use?
I use Wi-Fi.
Okay, phones Wi-Fi.
No, the router.
Okay, so the bandwidth is low.
No, the bandwidth is fine, but then my brother is in a meeting and my mom is as well in a meeting. It's like when
Okay,
there are like other connections and this meeting gets interrupted.
there is a simultaneously use. That's why.
Yeah, because I mean it was fine till now, but then just now my mom she also joined a meeting and my brother also has another tuition, so that's why the network
Okay.
is bad.
Okay. I'm saying that there is a main difference between these two chapters. The first one is retirement, and the second is death of a partner. There is a main difference between these two chapters is calculation of profit. Calculation of profit. Okay.
Yes, sir.
Now, if a partner retires, when a partners retire, then he think about timing before retirement. Yes,
Yes, sir.
means what will be the best time to retire? He will think about it.
Yes, sir.
But in case of death, it cannot happen. Yes or no?
Yes, sir.
Not possible, because you cannot decide the date of death. Yes.
Yes, sir.
So generally it happens between, or you can say during the year. Okay. Whenever a partner retires, it is in the beginning or end of year.
Yes, sir.
But generally death happens during the year, in between the year. Okay.
Yes, sir.
Okay. Now, if this happens, what do you think? The retiree, deceased partner will get share in profit of current year also? Uncompleted, incomplete year, because in current year he died during the year, so the year is incomplete. Yes. Yes or no, Aditya? Am I audible to you? Hello, Aditya.
Hello, sir.
Yes. Actually, I was asking, but your voice is not coming. So, I was saying that share in profit, deceased partner will get share in profit of this complete year or not?
Uh, I think the complete year maybe, or
The
until,
complete year?
yeah, maybe.
No, actually, if he worked for 6 months in current year, then he should get the profit in that uh, six
6 months.
months.
Yeah.
Yes. So
Yes,
he
sir.
should get share in profit. So if the account is not prepared, the final account, for calculation of profit, we prepare final account. Yes or no?
Yes.
Like trading account, profit and loss account, and balance sheet. Yes.
Yes.
So we have not prepared this account in current year yet. We will prepare this at the end of the current year. So it is not end of the current year. That's why it is not prepared. So we cannot calculate profit accurately. Yes.
Yes, sir.
So what we do, we estimate profit. We estimate profit by two methods on the basis of two things. The first is time and the second is sales. There is two methods for calculation of current year profit. Okay. The first is time method and the second is sales method. Okay.
Yeah.
In time method, there will be 2 to 3 items that will be given in question. You will be given previous year profit, or profits, means 2 or 3 years profit will be given. So you have to calculate average profit in that case. Okay.
Yes, sir.
Okay. Now, if we know the previous year profit, we know it is for 12 months.
Yes, sir.
So current year profit, if he died after completion of 6 months. Let's say previous year average profit was 2 lakh. Can you tell me what will be the share of B in this current year profit? What will be the share of B? Because B is died. B dead.
One second. So I should calculate according to the ratio.
Yes, you have to calculate it according to the ratio.
So is it 60,000?
60,000. How it is 60,000?
I did 2 lakh.
Into 3 by 10.
Yeah.
It is incorrect actually.
Into 6 by 12 too.
Yes, this 2 lakh profit is for 12 months. So first we have to calculate the 6-month profit. It is 1 lakh. Okay.
Yeah.
2 lakh into 6 by 12. If it is 3 months, then 2 lakh into 3 by 12, 50,000. Okay.
Yes.
So whatever the time period that after which the partner is died, you have to consider that time also.
I didn't get you.
First, you have to calculate current year profit.
Yeah.
Current year profit will be previous year profit multiplied by time divided by 12.
Yes, sir.
Okay. So if it is 2 lakh, then 2 lakh into 6 by 12. But if it is given 3 months, after 3 months he is died, he is dead, then you will multiply it with 3 by 12.
Yes, sir.
So you have to consider the previous year profit and also the time of death.
Yes, sir.
Okay. So first, this 1 lakh will be calculated. After that, you have to calculate his share of B. It will be 1 lakh into 3 by 10.
30,000. Yeah.
Okay.
Yes,
so
sir.
this is the calculation on the basis of time. There is also cells, but we will discuss that in our next chapter. Actually, due to some network issues, we have to complete this chapter today, but due to some network issue, we are not able to complete it. So we will complete it in our next class. Okay.
Yes, sir. Thank you.
Okay. Now, wait, just 1 minute. I told you about that Kindle book.
Yes, sir. Right.
Okay, so you have to download it and log in. You will find the chapter of retirement at page number 90. Okay.
Yes, sir.
When you log in, maybe they will ask you for login code or something. So you can ask it on the with our operation team. You can ask from them. Okay. And then you log in, you go to library page. Okay.
Yes.
And in that, there is first downloaded actually book. You will see the chapter number 6. Chapter number 6, page number 90.
Yes,
So
sir.
in that chapter, there is total 58 questions. Okay. Some of them are practical, some of them are theoretical based question, but all questions are MCQs.
Okay,
So
sir.
you try to solve some of the theoretical questions